Now, the Banking Association hosted their annual summit this week with a focus on the so-called Twin Peaks model and the implementation thereof. Now, the model involves structuring financial services regulation in such a way that it moves away from regulating the product with more emphasis on regulating how financial service companies deal with customers. Earlier, Gunther spoke to the MD of the Banking Association, Cass Kuvadia.
Yes, thank you. Mr. Kuvadia joins me now, so let's get straight to it. Welcome, sir.
Thanks for having me.
Let's start off with the purpose of this annual, well, the theme was actually the implementation of Twin Peaks.
Yeah.
Just bring us up to speed, please, over a quick 30 seconds or so.
On Twin Peaks?
Yes.
Okay, Twin Peaks is probably the most important piece of regulation for the financial sector since '94. It's meant to make the financial sector even more safer and more consumer-friendly and coordinate the regulation of the entire financial sector within these two peaks. One is a market conduct peak, one is a prudential regulation peak, and that's basically the intention.
Now, there have been several economic analysts who have criticized Twin Peaks as not workable, as increasing bureaucracy and so on. What do you have to say to that?
No, as the industry, we are supportive of Twin Peaks. We believe that it's an opportunity to bring about coordination of the regulation of the financial sector. We are of the view that all regulators of the financial sector, be it on the market conduct side or on the prudential side, should fall within those two peaks. And Ismail Momaniat from National Treasury at the summit yesterday said over a period of time that's the intention. We believe that it actually enables regulators to a certain extent catch up to the way business is done, because there's bank assurance models, insurance companies own banks, banks sell insurance, insurance companies do loans. This gives the regulators an overview of the entire financial sector on both the market conduct and prudential side, and we believe it will make regulation more effective, even more effective than it is, because we do have effective regulation. And so we are supportive of it. In Parliament, we did raise a couple of issues that we have, and the chair of the Parliamentary Portfolio Committee has assured us that we can interact with a technical committee on those issues in January.
Implementation, how far are we, stages, etc.?
It depends on the parliamentary process. I think that I can't see this getting through Parliament before probably end of July or third quarter of next year, because remember, we're going towards local government elections, the holiday period now, so it depends on the parliamentary process.
So that means that we might still see some tweaking?
Yeah, that's why we suggested a technical committee, which the portfolio committee has agreed to, and I think the technicians can sit down and see where it needs tweaking, where there's at least one or two clauses that could be considered unconstitutional, and we said let's take some advice on that. But by and large, we agree there aren't any deal breakers here. It's just starting it up. It's just to ensure that the final piece of legislation is such that we are all certain of what it says, we can implement, and we don't have to keep on going to Parliament for clarification on that.
Just one more question with regards to implementation. How will it be done? We have passed acts in stages, some come all at once.
Now this is, I think, the current piece of legislation is to establish the two peaks.
Yes.
The prudential peak seems to be clearer. It will be under SAB. The market conduct peak, there's some work to be done. It will either be under the FSB or the FSB will collapse into the market conduct peak. But this is to establish the peaks. A number of the people employed by the FSB currently will go into SAB, because SAB needs the insurance experience to actually prudentially regulate the insurance industry. And we trust that the market conduct regulator will be capacitated by people with banking experience, so that they also have the overall insurance and banking experience to regulate the market conduct activities of the entire financial sector.